So we had Kathy Wood on the show today, and you were on a panel with her this morning, and you unequivocally said, do not sell your Bitcoin. So what is your outlook for the market?
You know, my outlook is very long term, and the reason I say do not sell your Bitcoin is because if I look back at my life as an investor, the things that I regret are when I found a really good idea and I underinvested in it. Like Google was a good idea, Facebook was a good idea, Apple was a good idea, Amazon was a good idea. A digital monopoly that changes the world for 1 billion people is a good idea. And yet, the most common two mistakes after finding a good idea is, first mistake is someone says something, they talk crap about your idea, there's FUD, oh, Australia's going to tax Google, or somebody's going to Amazon's going to get regulated, or something will happen, and so people panic sell. And so whenever there's anxiety in the market and you panic sell and then you never buy back in, you regret that. And the second thing you always regret is you wish you bought more. And so a lot of people in the world, I mean, they're basically being knocked around and traumatized because the media is incentivized to generate a new story every day, and if it bleeds, it leads. And nobody wants to read a story that the risk profile hasn't statistically changed versus last year, and there's no reason to read beyond this sentence. So normally they always write inflammatory, anxiety-inducing stories, and when people read them and they think about it, it gets them on the skin, and they panic and they do something irrational. Bitcoin represents the dominant digital property network of the 21st century. It's a very simple idea. Take the money you want to give to your grandchildren, convert it to Bitcoin, put it in cold storage and wait. Let the rest of the world do the work, and you'll be the beneficiary of all the intelligent people, no matter where they might be in the world. You'll be the beneficiary of all their work with doing nothing else. There's only one mistake you can make. And the mistake you can make is study the world, get anxiety about something going on somewhere in the world, and sell your Bitcoin. So I think that the common phrase, you do not sell your Bitcoin, is similar to what's written on the back of Hitchhiker's Guide to the Galaxy, which is the famous 2 words from Douglas Adams: don't panic.
You basically wrote the corporate handbook on adding Bitcoin to your balance sheet and taking that approach. You just borrowed fiat cash against using your Bitcoin as collateral, $205 million to buy more Bitcoin. Is this what all companies should be doing now, in whatever way they're able to allocate funds in that direction?
We want to set an example for corporations, and so Bitcoin is pristine collateral. It's theoretically the ideal collateral against which to take a loan. And so we felt that by us doing this deal with Silvergate Bank, it would make other banks either jealous or comfortable, and hopefully we'll see an entire Bitcoin banking sector evolve. And we want to support Silvergate Bank, as they move into this space. I think on the flip side, from the point of view of a Bitcoin holder, there's been this meme of, oh, well, I buy some Bitcoin, I wait, and eventually I sell it to buy a Lambo. And I think it's very important for people to know that if you owned a block in Manhattan on Central Park in the year 1900, and if your father, grandfather, grandmother, or great-great-grandmother ever sold that to buy a Lambo, you'd be very angry at them. And if you go back in time and give them advice, you would say, Mom, don't sell the family property, borrow against the family property to buy the Lambo, and then I will inherit the family property, which will be marked up by a factor of 100, and I can also mortgage it or remortgage it to buy my own, electro hover car. So
a friend of mine sold his Tesla stock to buy his wife's engagement ring, and he did it at the most inopportune moment. And now he looks at that ring and he's like, that is the most expensive thing I've ever bought in my entire life. So it's the same principle that applies here.
My house in Miami Beach is 305 times as expensive as it was in 1930 when it was first sold. I have the bill of sale on my wall. If you back calculate, you conclude that the actual inflation rate of the money supply against scarce desirable assets is 7% a year for 100 years. The government statistic is less than 2%. And so you just have to ask yourself the question, do I want to sell something going up in value 7% a year when I could borrow money at 3% a year? And of course, with Bitcoin is more extreme. I mean, Bitcoin is appreciating not because of the rate of currency expansion, but also because of the rate of general mainstream investor adoption, and also because of the increase in technical utility due to things like Lightning and the beautiful things that are being done by Cash App and the like. So, you know, we set up a credit line, we borrow against it, we do it responsibly. We have $5 billion in collateral, we borrowed $200 million. So I'm not telling people to go out and take a highly leveraged loan. What I am doing, I think, is doing my best to lead the way and to normalize the Bitcoin-backed financing industry. And I think the corporate beneficiaries would be the Bitcoin miners. We're not the only ones with a Silvergate credit line. Marathon did a credit line with Silvergate Bank against their Bitcoin. So there's 24 publicly traded Bitcoin miners around now. And so I think there should be dozens and dozens of publicly traded companies that are doing this. I think there are a lot of Bitcoin holders that have always despaired they'd have to sell their Bitcoin, but they didn't want to. I had many people that are large Bitcoin holders text me and message me after they read about our deal, and they said, can you hook me up with the bank? I want to do the same exact thing. And I was like, no problem, here you go. And so I think it helps them. I think it also is very helpful in the institutionalization and the maturity of the asset class. Because if you roll the clock back to the 90s, it used to be, in Mexico, you couldn't get a mortgage. And you couldn't, you know, I hired a bunch of people from Mexico City, and they said, you know, Mike, we have to pay cash for a car, and we can't get a mortgage. And so no one can buy anything.
Yeah.
At the point that people started securitizing cars and securitizing houses, and you remember the great American program was Fannie Mae and Freddie Mac, and the idea was to make it easy to securitize mortgage so that you could drive down the price of borrowing so that a 23-year-old could buy a house. And I think that Bitcoin as an asset class, right, is going to benefit from the same securitization and the same financial development. As people realize they can borrow against something, then they realize they never have to sell it, and then they start to stretch their time horizon from it's a 36-month speculation to it's a 36-year holding. I really want people to think of it as the family farm. I'm living on this beautiful farm because my grandfather or my great-great-grandmother came here and said, this is where we should make a life. I'm not selling it, right? This is my vehicle to achieve my goals and my children's goals.
When do you stop buying Bitcoin for MicroStrategy?
Never. No, I tell people we will be buying Bitcoin at the top forever. I'm not trying to time the market. I don't intend to stop. You could think of MicroStrategy as we're kind of like your non-existent spot ETF.
Yeah.
If there was a spot ETF, you'd be paying 1% fee, and it would be not leveraged. With MicroStrategy, we have a software company that generates cash flow, and so we convert our cash flows into Bitcoin, and so we don't charge you a fee. We give you a yield, and between the cash flows from the software company and just a little bit of leverage that we can take via things like the Silvergate loan, we can give you a spot ETF that generates a 4 or 5% tax-deferred yield. And that's kind of an exciting thing. And when will we stop? Well, why would we ever stop? Well, we'll just keep accreting. It should get exponentially more expensive to buy the Bitcoin, but that's okay. You know, when Bitcoin's 500,000 a coin, someone's going to say, well, why are you buying that? You bought some at 10,000. And the answer is going to be because it's more scarce, desirable property than anything else that I could buy. And when will you sell it? You're not going to sell it until you've got something better to buy, but there isn't anything that I could see in this universe better to buy. So as we generate cash flows, we think that the responsible thing to do for our shareholders is we convert a currency which is devaluing into an asset which is appreciating. And we don't diversify because we're a public company and we have a strategy in our 10K, and our shareholders know what to expect. They want us to pursue this strategy. They can diversify, right? If you want to be 2% exposed to Bitcoin, you put 2% of your portfolio into MicroStrategy, and the other 98% of your portfolio, you can invest in whatever you want. They don't want the CEO of a publicly traded company to be unpredictable and random.
Yeah.
So you can imagine if I said, you know, Mackenzie, I think I'll buy some of this, but if I feel better about that, or if I feel the risk is different, then I'll change. And the problem with that is that no one else can rely upon us. And I think trust, it's a paramount theme. Trust is what built Bitcoin. Bitcoin is this universal trust network. And the people that all these people here love this is because they found something that they can depend upon and they can trust across borders, across time, across cultures, and that is such a precious thing. In the capital markets, the same thing holds. If you want to run a publicly traded company, it is very important that your shareholders trust you and your customers trust you. And trust means be predictable and do what you say you're going to do, right? And let other people, someone wants to hedge, they can hedge, right? I'm not going to hedge for them. I'm going to stay true to our mission. And when we decide to change our mission, we'll disclose it in an 8K, a 10K, or a 10Q, and the market will react accordingly.
Do you want to lend out your Bitcoin to generate yield?
We've thought about it. You know, we have all this collateral. We have $5 billion of unpledged Bitcoin, and we thought, do we lend it to someone to generate yield, or do we borrow against it? Okay, so we borrowed $205 million against it, bought $195 million of Bitcoin, and we generated a tax-free yield, right? So in essence, we bought Bitcoin. You don't have 125,000, you have 129,000 now. You got an extra 4,000 Bitcoin, and then whatever gain we get will be tax deferred. So we figured that was a tax efficient strategy because, you know, we've got interest payments, and it's also tax efficient for our shareholders because we're not incurring an operating income charge or a dividend charge. We could have gone to, we could go to an organization and lend them some Bitcoin. They would lend it out to someone else. They would give us a yield. That someone else would short the Bitcoin in the market, and then we would be taking the counterparty risk. And if they lend it out and then their balance sheet unwinds, we lose our Bitcoin. Okay, so that was a risk, and we didn't have a counterparty that we wanted to put $1 billion of our Bitcoin with, because we have to calculate what's the theoretical risk versus the yield. And then if you calculate the theoretical risk versus the after-tax yield, they pay us a yield, we have a taxable income stream. What you realize there is you're working very hard, taking a lot of risk to get not very far after tax. And then the other possibility is, look, if a big bank, if JP Morgan wanted to custody our Bitcoin and pay us a yield so it felt risk-free, just about as close to risk-free as possible, then we'd just be comparing the, do we want taxable income versus do I want Bitcoin exposure? And if you think that Bitcoin's going to go up 50% a year, no one's paying you 50% yield. So I would rather have the extra thousands of Bitcoin and get the appreciation tax-free. So that being the case, JP Morgan's not in the business of custodying Bitcoin and giving yield. And so what we did allowed us to basically put our Bitcoin in cold storage. We maintain custody of it, right? We found a bank that's FDIC insured that wanted to give us a loan. They're not lending it out. We're not risking our shareholders' balance sheet to any other counterparty. We're paying what we think is a very reasonable interest rate. And we're getting the yield, which is the pure Bitcoin yield, tax-free. And I think the pure Bitcoin yield is something like 5x to 10x what most counterparties would give us, unless we went to those hedge funds and they just lent it out to someone that wanted to short it. And then you're in a different risk management universe. And I'm a public company. I want it to be simple. I do not want my shareholders to be calculating what is the theoretical risk of the MicroStrategy or the MacroStrategy. There's a benefit to being simple and predictable. Plus, I just want the Bitcoin.
Today you said that the executive order from Biden a few weeks ago essentially gave the green light to Bitcoin. So are you feeling pretty optimistic about where we're headed in terms of regulation?
Yeah, I don't think it could have been better than that. Never in 100 years did the executive branch ever endorse an asset class. When commodity index came out, the executive branch didn't say figure out the commodities index. When John Bogle evangelized the Vanguard 500, the president didn't say every American and every agency should study the Vanguard 500 and indexing of equities, right? The last time the executive branch had something to say about asset class was the gold edict back in 1933, right? So I feel like we've got really good support from the administration. I think the regulators are progressive and very erudite. You know, when Jerome Powell, Janet Yellen, Gary Gensler have been asked about this, they say, look, it's a store of value asset, it's speculative. If people want to speculate, they can. It's not a currency. I think that all the regulatory agencies have some legitimate responsibility to work through. I think here's the big idea, Mackenzie, which is for a year I've been in rooms with trillions and trillions of dollars, you know, and it's like the Ray Dalio comment, the Jamie Dimon comment. It's something like this. It seems engineered perfectly. It's obviously better than gold. It's obviously better than all the other ideas we have. It's too perfect. It's too good to be true, and so I think someone's going to ban it. And that's not uncommon. People with large sums of money that are buying fixed income or buying equity index are like, yeah, it sounds really good on paper, but you know, it must be too good to be true. Nobody's going to let that around. And so how do you answer that criticism when someone says it's too good to be true? And it is too good to be true. It's like perfect money. It's a perfect gold with none of the defects of gold. And it's a big tech monopoly with none of the exposure that Google, Facebook, Apple, and Amazon have, because they have people and they do things. And so I wanted something better than a big tech monopoly, and I want something better than gold, and so I have Bitcoin. It's too good to be true. Someone's going to ban it. And the single best way to refute that is say, well, this is what the President of the United States has said. Whereas 40 million Americans want this, I direct you to figure out how to bring it in the public policy framework. It's not going to be banned. If you disagree with the White House, the administration, the Senate, and the Congress, I'm not going to get your order. I get it. You'll be a late adopter. But I really think that we couldn't have had a better development than that executive order.
Obviously, you're a pioneer in terms of institutional adoption. Russia just saw its FX reserves weaponized against them, and typically you have this dictator's dilemma. A country like China and Russia is usually resistant to a currency that they can't control, but had Russia had Bitcoin on its balance sheet, it would have been a different story. And so, do they become first movers in terms of countries adopting Bitcoin, putting it in their reserves?
You know, Bitcoin's a paradigm shift, and the thing that causes new paradigms to be embraced is either the old guard dies, generational shift, like the millennials below age 40, they all get it. Or the other thing is a war. and when you're forced by a war. And this is a classic example where Russia is forced to reconsider their treasury reserve strategy. And then every other country is invited to consider their treasury reserve strategy. Because the two challenges of a treasury strategy is, will my assets be confiscated or will they be inflated away to be worth nothing? And if you're the Chinese and you have $3 trillion of sovereign debt, and if the dollar is devalued by 20%, then your citizens paid a $600 billion fee to basically support inflation of some other country's currency. It's a deep argument, inflation. Unfortunately, a lot of people, they'll be inflated away before they come to their senses. But when you confiscate someone's money right in front of their face immediately, that shocks them into action. So I think that the Russian sanctions have shocked it shocked Russia. Obviously they have to figure out a new strategy, but I think all their trading partners now are forced to figure out how they feel about a different strategy. The Indians, etc. And then the Middle Easterners start to think about this, and the Chinese have to think, if there's ever a squawk or there's ever a disagreement about the South China Sea, what happens to $3 trillion of their reserves? I think that in the near term, it creates a bit of chaos and anxiety. Over the midterm, it creates a lot of inefficiencies, and we go from a single strategy to multipolar. And over the long term, I think all rational individuals conclude that being able to rely upon a neutral, non-sovereign, technically secure, ethically sound, fair monetary network is a reasonable compromise for all sides. A Switzerland that allows no one to victimize anybody else. And not only is it fair and ethical, it is also functional, and it is progressive, because we can build a better world for 8 billion people on a network which moves money at the speed of light and moves all forms of money at the speed of light. And it's clear that gold is not going to move all forms of money at the speed of light. And it's pretty clear that we can't have Chinese trading, a bunch of asbestos to the Russians for a bunch of oil at scale. And it's pretty clear to the world that the system we had was the best we could do in the 20th century. And it just doesn't work for Russians and Ukrainians and people in Africa and Asia and South America in the 21st century. And so I think this is just a big catalytic event that invites everybody in the world to ask the question, is there a better way? And I think Bitcoin is the better way. And the result will be, hopefully, peaceful resolution and efficient settlement for everybody.